Hello, investors and traders, and welcome to this week's market report. I'm AJ Monte, and we're looking at a one-year daily candle chart of QQQ, which is the NASDAQ trust, more or less representing the tech sector. And if you were following along with last week's report that went out on Friday right here, I said that this was a bearish harami, and I drew this diagonal line stretching out with my target price to fill the open gap down here. That's what that horizontal line represents. And lo and behold, what happened? Monday and Tuesday, we went down, filled the gap, and then we bounced. Now, if you're following along with my reports long enough, you'll know that 80% of the time, gaps fill, and then after that, there's an 80% chance that the price will reverse, and that's exactly what happened. So what does that mean for next week? Well, in order to show you my forecast lines for next week, I'm going to erase all lines here and draw some new lines for you. Right here, the high from last Thursday, I'm going to draw a horizontal flat line resistance. That high here, Thursday and Friday, matches perfectly with Thursday's high. You see this candle right there, as I magnify that, that's a doji. It's almost an inverted hammer with a long shadow above that candle, and that's bearish. Today, you'll see, although that's a small-bodied candle, that red body engulfs the opening and the close range from yesterday, and we're starting to see down here the CCI starting to hinge lower. So, I believe we're going to go right back down to this low here to test that low, and that's my forecast for next week. Now notice the angle in which I'm doing this. Okay, I'm going to probably make this a 2-week forecast because all I'm doing is I'm mimicking the angle of these speed lines back here. You see the angle here, and you can see the angle from the last sell-off. It's almost running parallel to this. So I'm being conservative by giving that a little bit more time to do that. But my target price is absolutely going to be that low from what we saw on Tuesday. So that's my forecast there. Now, if I go to the VIX, ticker symbol VIX, this is the Volatility Index for the S&P. You'll see that my lines are still in place. On Tuesday, we came within pennies of hitting my target right there and then drifted back. Now, the thing about the VIX is that it's an oscillating indicator that more or less leads the market. It's also known as the fear index. So right now, you can see that there really isn't any fear in the market. I would call that as a sign that the investors and even traders are becoming a little complacent. But what draws my attention to the VIX on the upside, and that's where I think it could go, I'm going to draw this forecast right here, again, mimicking the angle from back here. If you look at the CCI down here, it too is hinging up. Now, that upward tick or hinge is bullish for the VIX, and that would be bearish for the S&P because they're inversely related, right? So that's my forecast for the VIX next week and maybe beyond next week into the following week. But I think the VIX is going to go higher. And this leads me to the S&P. If the VIX is bullish, I believe the S&P will pull back, and that's exactly what I'm seeing. Now, as I analyze this, notice we did not hit my target here, and it doesn't mean I'm wrong this week. It means I'm not right yet. I'll phrase it that way. I still think that the S&P is going to drift lower, and I'm going to more or less remain there with my target right from here. I'll erase that. I'm going to leave my gap fill target or support level down here, and then draw your attention down below, because this is where we get the most significant signal. Last week, I even forecasted what I thought would happen with the CCI. I said it would most likely drop. It did that. This here is a very accurate forecast, but notice what was happening when the CCI was going down. The price was still going up. Today, even on this green candle, we see that the CCI is still going down. That's known as a negative divergence. And when you have higher highs here, right there, I'm going to highlight this for you. When we have higher highs, but we have lower highs on the CCI, That's known as a negative divergence. And I called that last week in the silver markets when we were doing a call on Friday. And I said, those negative divergences are something you cannot ignore. When Don Lambert put this out and created the CCI, he pointed out one of the most significant values, I guess you could say, for the CCI was found in these divergences. When prices go up and the CCI goes down, watch out below. So I'm going to keep that target in place for the S&P, and then we'll move on from there. Now, the Russell 2000, okay, was a little bit different in my forecast last week. I said last week we would go up early Monday and Tuesday. See this little move higher? That's exactly what happened. Monday, Tuesday, we went higher. We actually hit the high on Tuesday, and then I said we would drift lower. I'm going to keep this target in place. I still think next week we're going to move lower and retrace back towards that moving average. I'm just going to move that out on the timeline just like that, right? So that's what I think is going to happen to the Russell 2000. Again, notice we have lower highs forming, and today we had a lower high, lower low. And yesterday, right there as I magnify this, the CCI crossed with a sell signal, and the same thing happened with the stochastics. See that blue line? That's the percent K. That crossed down below the percent D, that red line. The red line is the signal line, and right there we had our sell signal. So the Russell 2000, although it's a broader based index, it's also made up mostly of small cap stocks. So be careful of that, and make sure you protect your downside with stops, or maybe you could use some option strategies to protect your downside, protect those profits, and then we can move on. Now let's look at the diamonds right here. Really much the same story as what we've seen in the other markets. We moved higher, but look at the divergences in the CCI. Look, I'm gonna erase this right here and show you the divergence. Look, we have higher, much higher highs here, and we have lower highs, not just going lower on the highs, but look what's happening. We have an acceleration of that downward move on the CCI. See that? With a sell signal created today, right there, see how the blue line crosses below the 100 mark on the scale? This horizontal red line is the 100 mark, and it's crossing down below that. So we have to look at that, protect our downside. There's gaps below the market right here. I think that the Dow will eventually come back down and fill that gap. And one other thing I would like you to consider, keep your eyes on what's happening between China and Japan. There's a lot of tension building up in the Japanese chain of islands down there, where there could be a face-off that unfortunately could bring in the U.S. We're still within a treaty with Japan to defend them militarily, and that could get really ugly. So you have to keep that in mind as you decide to take new long positions. That's number one. Number two, if I go back and look at the monthly charts, I want you to pay very close attention to what we normally see. If you go back 100 years on the Dow and a lot of the other markets, you'll see that September and October are notorious for down markets. Here is a point where October, we went into that sell-off. You can see right here as we get into the early September right here, and October we pulled back here on that, and that pullback right there. If you keep going on and you look at some of the September sell-offs that we've had, look at this area right here where we had sell-offs. You just keep going on and on. September and October are notorious for sell-offs. And if I'm looking at the monthly chart, look what's happening. We're not quite at the highs that we were back in the beginning of the year, but look at the bleeding off of the volume month after month. This, on a monthly scale, is extremely bearish, and I point this out to you to bring your attention to risk management. If you're taking any long positions, you really need to pay very close attention to support levels, to moving averages, to the size of positions you're taking. On the short side is good, but the long side could be treacherous, and be very, very careful. So pay close attention, stay in touch with us, and I'll do my very best to give you the information as we call it each and every week. Have a good weekend. So long.